Hey traders, John Fortune here with this week's Weekly Forex Forecast for the 9th of December to the 13th of December 2019. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're all having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off with the US dollar index. Now, last week in the dollar index and the dollar pairs, we had a reversal week. We had the support level we were looking at last week failing to hold, and we had a big sell-off to the downside. And it's actually starting to form what's known as a double top pattern here. We've actually broken the confirmation point. So looking at the dollar index going into this week, based on the fact we had this reversal now last week, we are looking for further declines to the downside as the higher probability play in the dollar index next week. What we'd like to see if we can get a pullback, any pullback in this area, and as always, preferably if we can come back and retest broken support, turning resistance, in this case at the 98.17. This is going to be a great place to start to look for further declines to the downside in this market. And we're going to be looking down towards the next key area of support to the downside and a target set at the 97.11. So as a result of this sell-off last week in the dollar and the dollar pairs, we go into this week with a bearish bias focusing on sell trades in the dollar index and also generally across the dollar pairs this week. So the next market we're going to look at is crude oil. Now, last week we were looking further advances to the upside in crude oil, and we did come and take out the target set from last week. We are looking further advances to the upside again this week in crude oil. So very simply put, going into this week, if we can get a pullback, and preferably as always, if we can come back and retest broken resistance, turning support at the 56.75. This is going to be a great place next week to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 60.86. And if we can get a break through here, we're going to be looking up towards the next key area of resistance, the upside and target 2 at 62.93. Now, just bear in mind, as we've said in previous videos, if you are looking to trade crude oil next week, just bear in mind it comes with a heightened risk of choppy markets. We've seen this market be quite choppy in the recent weeks and also months. So if you are trading it next week, just be aware it comes with a slightly heightened risk of corrective behavior. And therefore, any setups in this market next week will come with a slightly higher risk overall. So next market we're going to look at is euro dollar. Now, inversely to the dollar index, you can see we have this double bottom pattern, which actually broke the confirmation point last week. So in terms of probabilities, we are looking for further advances to the upside in this market next week. We're going to focus on buy setups, and if we can get a further pullback, and preferably as always, if we can come back and retest broken resistance, turning support at the 1.10270. This is going to be a great place going into next week to start to look for those bullish formations and patterns. We're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 1.1162. So the next market we're going to look at is pound dollar. Now, last week we had pound dollar down as what we call plan B currency, which is where even though the dollar index was structured to the upside, the pound was still structured to the upside against the dollar. So even though we had at the start of the week, although it reversed, we had at the start of the week a strong dollar, we also had a strong pound. And what we're saying last week is a plan B currency whereby it is structured in the opposite direction to the general strength of, so let's say in this case, the dollar index. And therefore, if the dollar index fails to continue up or it starts to reverse, it would be a good one to come to. And you can see with that failure to continue to the upside in the dollar index, with that reversal to the downside, we did have this rally in the pound dollar, taking out the target set last week at the 1.30190. So very simply put, going into this week, we are now looking for further advances to the upside in this market. We're very close to the next key area of resistance at the 1.31790. So in order to get some good risk to reward, what we'd like to see first is if we can get a pullback, and preferably as always, to give us the best risk to reward, if we can come back and retest broken resistance, turning support. This would be a fantastic place next week to start to once again look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 1.3179. And if we can get a break through here, we're going to be looking up towards the next key area of resistance, the upside and target 2 at the 1.3350. So next market we're going to look at is US dollar Japanese yen. Now, you can see with the US dollar Japanese yen, although we are looking for further declines to the downside in the dollar index, the US dollar Japanese yen is actually still structured to the upside. It's the only currency pair this week in the dollar pairs that is structured in the opposite direction to what we're looking at in the dollar index. So how do we use this? Well, very simply put, we're going to use this just as we used the pound dollar last week as a plan B currency. That is to say, we'll be focused on all of the other dollar pairs primarily, but if we fail to get that decline in the dollar index next week and instead we start to see a strengthening of the dollar, this will be our go-to currency as a plan B, as a backup, and we will be looking in this area. This is actually a great area if that happens, to start to look for bullish formations and patterns. And if those circumstances arise, we'll be looking at initiating longs in this market back up to the top of the range here, and the next key of resistance to the upside at the 109.39. So just to clarify, we are looking overall primarily for dollar weakness next week, but if that fails to materialize, the US dollar Japanese yen will be a good one to look for as a plan B setup for that strengthening to the upside in the dollar yen. So next market we're going to look at is Aussie dollar. Now last week we had this big explosive move to the upside after lacking some momentum down in this area, and we should be looking for further moves to the upside in this market next week as the higher probability play. Very simply put, what we would like to see before we can come and achieve this target is if we can get a pullback, and preferably as it always gives us the best risk to reward, if we can get a pullback and a retest of broken resistance, turning support at the 0.67800. This would be the best place going into next week to start to look for those reversal patterns, to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key of resistance to the upside, the target set of the 0.6882. And if we can get a break through here, we're going to be looking up towards the next key of resistance to the upside and target 2 at the 0.6929. So next market we're going to look at is New Zealand dollar. Now last week we had this big rally to the upside, this strong momentum to the upside, and we should be expecting a continuation to the upside as the higher probability move in this market. So very simply put, going into next week, any pullback in this area, and it may be a bit of a stretch to come all the way back and retest broken resistance turning support. So any pullback in this area is going to give us an opportunity to start to look for those bullish formations and patterns, for those reversal patterns to the upside. And we're going to be focused on long positions next week in this market, and we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set, the 0.6625. And if we can get a break through here, we're going to be looking all the way up to the next key of resistance to the upside and target 2 at the 0.6683. So next market we're going to look at is US dollar Swiss franc. Now last week we had this big decline to the downside as we had that sell-off in the dollar index, and very simply put, going into this week we're looking for a further continuation to the downside as the higher probability move. What we'd like to see is we'd like to see continuation in this retracement, preferably coming back to retest broken support, turning resistance at the 0.99790. This would be a fantastic place next week to start to look once again for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.9839. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 0.9701. So next market we're going to look at is US Dollar CAD. Now we start the week testing a key area of broken support, turning resistance from the past in this market at the 1.32680. So very simply put, going into next week, this is a fantastic place to start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.3120. Last but not least, we have gold. Now, last week we were looking for further declines to the downside from this key area of resistance at the 1481.39. You can see when we traded into this, we had a really nice sell-off to the downside. We didn't come all the way down to the target, but we did have a nice sell-off from this area highlighted last week. Very simply put, with the dollar index now weak and with that reversal in the dollar index, there is a heightened risk that we get a reversal to the upside in gold next week, as we have gold outvaluing the US dollar, which is currently set to be weak going into next week. So very simply put, for anybody short last week from these areas, what we'd like to do is going into next week, we would like to cover our shorts in this area. Anybody short looking to book profits going into next week because of the heightened risk of reversal against a weak dollar. And what we'd like to focus on next week is if we can come down and test the range bottom here at the 1458.22. This is going to be a great area to start to look for those reversals to the upside in gold. And we'll be looking at initiating longs back up to the key area of resistance to the upside in the top of the range at the 1481.39. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far, and also a big thank you to everybody who comments on the channel on a regular basis as well. I want to wish you all a fantastic weekend, and I want to wish you all a profitable week next week. The only thing left for me to say, guys, is take care and don't forget to trade safely.